Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to give you a brief update on the Iran-U.S.-Israel war. We've seen some developments in the last 72 hours that are fascinating. We had a big crude oil open right up over $100 a barrel, and then we've come back down to about $95, $96. I'm going to bring up the time price offering charts. A lot of you really like those, so I'm going to pull those up again. Today, we're going to talk a little 9 EMA. I'm going to show you how to add that 9 EMA EA to your tradable instruments over at Switch Markets with crude oil. We've also got some trade updates. We had an absolute banger. I mean, an absolute banger come across the boards in gold yesterday. It was a beautiful trade. We're going to go ahead and recap that one. Just an absolutely fantastic trade for 1,500 pips. Really liked it. Really liked it. It was a nice clean hit on 5,000. And since then, we've sold off underneath 5,000 according to that 920 EMA strategy we looked at on Friday, where we had a sell signal really setting up. We had that 9 crossing under the 20. And now we're sort of in a free fall mode. I talked a lot about that 49.96 level, last week's low, how that could potentially be a catalyst for a major bearish move here in gold. We're starting to see it. It's starting to develop. So I'm going to go ahead and pull that up. I will beg your forgiveness right away. I don't ask for forgiveness very often, but today I've got something going on in my throat, so I'm going to do the best I can. The wind here in Montana has been like 50 miles an hour for the last 4 days. Whatever it kicked up whatever kind of dust kicked up, it got into my throat. So I'm going to do the best I can to go as long as I can, but there is a chance here that this might just grind to a halt. And if it does, then we'll have to come back and give it another shot tomorrow. So I want to welcome everybody back to the trading room. Remember, I'm Shane Vernier from How to Trade. If you're definitely looking for a broker, you ought to check out Switch Markets. That partnership has developed here in about the past year, and it's all about synergy. It's about figuring out exactly what you need on an educational perspective. That's where How to Trade is, and then giving you that market access. That's what Switch Markets does. So always remember that. We're working in tandem, and if you need any questions at all, remember on the brokerage end of it, you contact Switch Markets live support, and then if you have any questions about trading at all, you can reach out to me. I won't give you my whole background, but I've been doing this for a long time, since about 2011, and it's been a heck of a ride. And some of the traders that have been in this room, the How to Trade room, and in the community for the past year, several years, starting to see some really green shoots and some great stories, folks that are having some success in the markets. Now, this month, not easy. Not an easy month to be in there trading. Not easy at all. I have reined my operations back in a big way because the ranges are huge. The risk is huge. There's a lot of opportunity out there. Don't get me wrong. But with this war, look out. I mean, the volatility just seems to spring up out of nowhere. So we're going to go ahead and cover that. We're going to look at some poly market odds. We're going to see exactly where this thing's going. We're also going to do some trade updates and answer any and all questions you may have. It's a Monday. We'll talk a little Monday psychology as well. So we got a lot lined up for you today. I'm very excited to be here. Happy to be here. And if you have any questions, be sure to drop them in the live chat. Let's see. Tina Jane, good to see you. Tina, welcome. Kirsty T, good to see you, Kirsty. Welcome. Jason Max and sup, Jay. How you doing? I'm doing very well. Naomi Rise, and good to see you, Naomi. Welcome. Let me see. Tina Jing, we were spot on with gold. It broke 5,000. It starts going lower. Yeah, we're going to pull up the technicals here and sort of show you the case for potentially a big washout developing here in mid-March for gold. I'm surprised, but nothing really surprises us much anymore. Let me see. Eli. Good to see you, Eli. Welcome, 512 Eli. It's very tough this month. It's been a challenge, Tina. It's been a challenge. I'm one of those people that when I see the big market drivers step in and I watch the war and I watch the way the volatility starts to develop, I wouldn't say that I'm scared to get in there and trade, but I know me, and I'm going to want to start shooting for the moon and going after the big money, and we don't need to do that to make a living in these markets. You just got to be smart, and you got to be able to manage your own expectations. Team Marina, good to see you. Tina, welcome. Let's see. Camo. Hi, it's Martin from Uganda. Good to see you, Martin. Welcome. All right, and over in the How to Trade community, Bobby Bob. Hi, Coach. How was your weekend? Pretty good weekend. Not too bad. Actually had a pretty good bet come in for me. I had, what was it, Virginia against Duke, and I had 7.5 points, and it cashed in nicely on Saturday night. So I was happy. It's March Madness, so it's basketball. We're going to be betting a little bit of basketball in the next couple of weeks. I'm always happy to get a little bit of action on the side, but I had a great weekend. So thanks for asking. Other than this throat thing, I'm good. Tuku, good to see you, Tuku. Ralph H. Hey, Ralph, how you doing? Steve France, it's always a pleasure, guys. All right, let's get right down to it. Let's start out with a market profile look at your crude oil markets. Now, the biggest thing I want to point out here, and probably the biggest takeaway that you need to be thinking of when you're thinking of crude oil is $100. And I like to keep things as simple as I possibly can with my technical analysis. A lot of the people in this industry, the professionals, they try to make things so difficult. You don't have to make it difficult. Now, all this fancy color and all this stuff, don't get too carried away with it. What we're looking for is that point of control. And what a point of control is that's the area where we've done just a tremendous amount of business. Now, you can see this point of control was from Friday, typically right around that $100 level. It's not necessarily Friday. It's a mix of Friday and yesterday's electronic open, which was right around 100. But that point of control, somewhere right beneath 199, 99.50, somewhere in there, that's an interesting level. I have a feeling that we're going to go up and check it out. Maybe not by the end of today, but probably tomorrow, the next day. It really all depends on the news cycle that we get out of the Middle East. But right now, today's point of control, what we've seen during the U.S. session, we're right down here, right around 95. So 94.86. So what are we really talking about? We're talking about big round numbers. We're talking about 100, 95. And if you take a look at the price action and where these futures contracts opened yesterday, it really was one of those deals where you said, okay, where did we open? You opened right there at $100.93 a barrel. Since then, you've sold off. The high was 102.44. Sellers were there at 102.50. Still a very bullish market and a lot going on in WTI crude. So I want everybody to really be aware of what's happening on an intraday basis. It's important that you understand exactly where we may be headed in the oil markets. And I got to tell you guys, it's really bullish. It's really bullish. So let's go ahead and shut off our TPO charts. And now you can see what we have developing here on this U.S. oil market. That was probably the biggest day maybe in the history of oil. I mean, it really was. I mean, that's a monster day. That's a huge range. It reminds me of the COVID stuff where we saw crude oil plunge to negative $40. But let's go ahead and get rid of everything right now today. What could we be looking for a trade? Even though you got a big negative candle here, a big negative print, I'm still looking at the top side of this market. I think it's a fantastic time to be looking for a bid. So maybe that spike low right there up to today's high, which is right around 102.50, somewhere in that zone, 102.44. Dial these Fibonacci's incorrectly if you're going to trade them. Remember that it's all about precision in this game, so you've got to make sure that that's exactly right. And sometimes we just sort of get it as close as we can, and then we move on. This sell-off, though, look at that. 92.59, right at that bottom. That's going to be a big-time support zone. We're damn sure going to cover that on our weekly picks, our picks of the week, hot picks. I'm going to go over the U.S. oil markets and the Brent crude oil markets and make sure that we're all locked and loaded and ready to go. Natural gas is interesting. Natural gas is another one that we have to look at. We're going to look at that here in a minute. But the gold market was an absolute banger, fantastic trade, and we got to recap that as well. If there's any markets that you'd like to look at, be sure to call them out in the live chat, and I will be sure to cover them, do the best I can with it. Let me see. Lewis, good to see you, Lewis. Welcome. Tina Xing, I saw news Iran wants to open the Strait of Hormuz with conditions. Well, I mean, there's a lot going on there. There's a lot going on. Right now, Iran's letting oil go through. They're letting oil go through, but the shipments have to be denominated in yuan, Chinese yuan. So the idea is that Iran essentially is attacking the petrodollar, which is a fascinating move. It's a fascinating move. It's similar to what Russia did. Just a real quick primer. It's similar to what Russia did with the natural gas trade after the Russia-Ukraine war kicked off. They were in a situation where there was huge embargoes, but Europe proper needed a lot of that natural gas from Russia. Well, the first thing Russia said, well, you're going to do business in rubles then, and then we're going to go ahead and peg, at least partially, peg our ruble to gold. And what you saw there was really a clever way of making all the sanctions and things really minimal. They're not minimal. They had a big impact, but they didn't have the impact that the Western leaders thought. They thought by throwing Russia off the SWIFT system and by sanctioning them, you were going to get a massive impact with those economic sanctions and those embargoes. And it didn't. I mean, I hate to say it, it didn't really work. I mean, the first thing they did. So what do you see Iran doing now? So Iran all of a sudden is letting shipments go through, but the transactions have to be denominated in yuan, Chinese yuan, the yuan rabini. So it's a fascinating time to be watching this stuff. To be real honest with you, it's hard to get excited about trading when you see the devastation on TV 24 hours a day. There's more important things than trading, and there's more important things than making money, but that's why we're here. So we do need to address these things. But that was a fascinating move. Tina, you're absolutely right. They want to move oil through there, but they don't want it denominated in U.S. dollars, which is a direct attack on the petrodollar, and it is economic warfare. And it's one of those developments that if you did not strategize for that, if your folks weren't up to speed on that type of thing, that could happen, then you're behind the curve. And I think that's an interesting time. It was a heck of a move, and I was really blown away when I read that. And I said, wow, what is going to happen in the Strait of Hormuz? Well, we're going to look at our odds here. We're going to talk about a little bit potentially some land invasions. There are some Marines headed to the region, 5,000 amphibious. We covered this on Friday. We're waiting. We're going to look at those odds as well. So good to see you. Let's see. A lot of folks showing up today. Great. Marvel, good to see you, Marvel. Blessed week to us all. Special greeting to you, sir. Thank you, Marvel. I sure appreciate that. A blessed week for everybody would be fantastic. I like the good, not necessarily don't want to dwell on the bad. Daniel, rate decision week going to be volatile like heck. Yep, absolutely right, Daniel. We're going to cover those events here in just a second as well. So it's good to see everybody out. The U.S. dollar kroner. Wow, that's a good one. I haven't looked at the kroner in a while. Let me see. Bobby Bob, Great Britain pound, Japanese yen, and Bitcoin USD. Absolutely. We'll look at all these markets, and we'll get it going. You're not too late, Marvel. You're in the right place. Let me see. Tina Xing, China is friend with Iran, and so is Russia. Well, I mean, friends is always a loose term. Friends this, friends that. I don't know if they're tight friends, but we do know that Yeah, they get a lot of weapons from China and Russia. We do know that. So it's a fascinating dynamic in the Middle East. There's no question about it. Let me see, Daniel. They had a big impact for Europe. Yeah, basically, the natural gas trade was everything in the Russia-Ukraine war, for sure. All right, guys, let's get out to price action, see if we can get something going on here. Let's talk 9 EMA for a second. Remember, if you're looking for a strategy here, this 9 EMA is put out by me over at How to Trade and Switch Markets. Wanted to use this strategy basically to give folks an opportunity to trade with a little bit of structure. One of the biggest things you see with new traders and veteran traders is when they have problems trading, essentially it all revolves around discipline and being able to manage trades. So what we did was we came up with this 9 EMA. We made a video about it. It was really a big hit on our How to Trade YouTube channel. People really liked it. Well, some people liked it, some people didn't. And we built an EA and built some PDFs that show you exactly how to trade this thing. And it's an interesting strategy. I mean, it's not a bad place to start. If you want to start, it's not a bad place to get your boots on the ground strategically, so to speak. So what you have here is we have a WTI 5-minute chart, and you can see the big action. We've had a lot of requests for oil. We're not going to spend the whole stream on oil. We're going to cover that later in the week. But what we are going to do is run through just real quick how you can add this EA to your charts. So what we have here is we've got all of our oil. We've got Brent futures, we've got crude oil, WTI futures, and WTI. WTI is going to be your spot, WTI light sweet crude. So we built the EA. Once you load it into your MT5, you just drag and drop. Very simple. Make sure your algo trading is go ahead and make sure that's enabled, and now you're going to get the signals, and this is a pretty darn good one. That was a great buy right there. Got swept out of the box earlier today on a 5-minute chart, and right now we're starting to see that volatility pick up. So let's go down to a 1 minute potentially, and we may in fact get a decent signal here on WTI while we're on our live stream. So I'll be monitoring this. All the indicators are audio too, so I will hear the bell if we do get an opportunity to trade. You can see we're beneath 30. We're waiting for a bar close up above that 9 EMA, and that'll sort of be our signal to go long. So we're going to go ahead and wait and see how that develops. But drag and drop functionality on MT5, I really like that. I like the trade management as well. So it's not necessarily a bad place to begin trading. If you're having problems with a strategy, that 9 EMA can help you. But just remember, it's a jumping off point. The idea was that came over from How to Trade, and what that is, it's not a signal provider. It's a way for you to build a strategy and trade with structure. A lot of people really like it. Me personally, I think that I see it's got incredible potential. But you've got to be in a market that's volatile, and you have to be on the right time frame, and you have to be able to really manage that risk 1 to 3% on a given trade. That's for sure. Andrea Garwell, good to see you, Andrea. Welcome. Okay, everybody, so we're going to go ahead and wait. We're going to let that simmer and see if we can get an actual trade, a trade set up here. Interesting stuff here. Trade update. Oil's up. Stocks down. 5,000 in view for gold. I promised you some gold action. So this was a great trade. No question about it. This was really a good one. We were looking to buy 5,010s and get out at 5,025s, which is a nice $15 move. And the market is so volatile that it's really doable. So let's go ahead and take a look at what's happened here. So 5,000, just since we've been talking, we've seen a pretty good rally here in the gold market. All of a sudden we're off. You're off about 0.3%, about $15, sort of a flat day for gold. We're going to go through the long-term technicals here in just a minute, but what we had a bidding opportunity right there at 5,010. So you can see the white line sort of very close here. Excuse me, my throat. Like I said, I really appreciate everybody's patience, but man, it is scratchy. In any case, that was our bid, was 5,010. So you saw exactly what happened today. He said, Shane, was this a winner? Well, I said, well, let's go down. Let's reverse engineer it. Let's go down to a 5-minute chart and see exactly what happened from this level. And it was about as good as it gets. It really was. Go right back to that first test. Boom. What do you got there? 5,977. Quick interruption. We just heard our bell go off. And all right, there's our signal. So let's go ahead. We're going to go ahead and send one lot of WTI long. We're going to go ahead and bring that stop loss. I'm going to put it beneath the swing low. Typically, that's how I like to do it. But you could also put it beneath the signal bar. Personally, I'm going to go swing low. And we're going to see if we can maybe get a little bit, maybe a 1-to-1 move here. A nice little move, maybe right back up to about that 95 zone. Interesting, but we're immediately taking heat. So we're immediately taking heat on this trade. And remember, you're going to win some, you're going to lose some. The biggest part of all of this is just risk management and being able to cut off losing trades. If you don't do that, we sort of went through one of those on Friday. I showed you exactly the mentality behind getting into a losing trade and not being able to get out. It's pretty instructive. In any case, this one's sort of breaking our way now. We're in the profitability mode. Let's go ahead and let that one simmer and see exactly what happens here in a few minutes. But this was interesting here. This was the gold trade. 5,000 was the key level, and there it is. It's a perfect inverted hammer. Your low comes down to about $5,009. Our entry was 10, and then you got the sweet bounce right up there, 5,023 almost immediately. And if you hung in there a few minutes, you got paid. This level really held out very, very well. The high right there, the immediate high was about 5,030. We were looking for 25. That's a pretty good move. That's about a $20 move, very, very strong. And then what happened? Compression. We finally broke beneath 5,000. And then you saw the big sort of sell-off down there to about 49.67. We'll show you why that occurred in just a second. And since then, we've just sort of been straddling that 5,000 line. We're not really in a hurry to go much of anywhere, and that's a real challenge for us as active traders. We always want to pick a direction. Shane, are you bullish or are you bearish WTI? Are you bullish or bearish gold? I go, gold's a tough one because you're in a flat rotation. You're in a rotational market. It is not trending. The long-term trend is clearly bullish, but right now you're not really trending. So we've got a lot of action here. I would just get rid of the 5,000 label there, the 5,010. 5,000 is where really the action is. So if you take a look at your weekly chart, we talked a lot about this last Friday. I said, you got to really be careful here. You really got to be careful here because why? Well, take a look at it. You've got a weekly low here, right? Weekly low, 49.96. You've also got last week's low at about 5,000, 5,009, somewhere in there. You sort of figured you were going to get a big washout here, and that's exactly what happened. You had a washout down to about 49.67. So now the real question is this trend going to continue? Are you going to see this market really break and maybe go down, check out 4,500? I think it's possible. But right now the bidders are there. The bidders are there. This market did not explode to the south. We had a quick $50 washout beneath those two strategic lows 2 weeks ago, last week's low, and then bang, big move. And then you got 47.92 right there. Probably going to be a pretty good area that I would be surprised if we don't test it. Now that the symmetry's been broken, I would be looking for a sell-off, something like that. I would be looking for a lower shadow potentially to take us down there, maybe to 4,800, somewhere in there. We'll have a trade idea for gold out probably later this week. I'm going to let this one simmer at least for a day or two. But I think this is an interesting market. 5,000 clearly is where everybody's doing business. So if you do see a sell-off here, 49, 12, 50%, I'm not really interested in that. I am interested in 62%, though, down there right around 4,800. I think that's a pretty good trade and one that we're going to be looking at very closely as the week goes on. So that's a good look at gold. As far as short-term trading, this was a big one. This was back from Friday or 12th of March. So I guess what was that, Thursday? It was a sell signal. 920 EMA crossover. The 9 crosses under the 20, gives you the purple bar. We've got all that coded and everything, and then there's your sell. It was a pretty good sell. You're selling 51s, and you went right down there to 49.60. That's a fantastic trade. Really could have been very affordable for you, too. You could have easily taken that sell right in there, and then right here, you could have had the top side. It would have been a real tight stop. That's a pretty good trade. That's not a bad one at all. You got a real beautiful move, and the reason why you got that move is because the market just decided it was going to break south beneath those two lows. So you washed out a lot of retail longs. You swept them out. Now the market looks to be maybe stabilizing around 5,000. Should not be a surprise to anybody, but that seems to be what's happening here. So a lot going on in the commodity markets. I always like commodities. They're one of my biggest. That's what I trade essentially. Commodities, some equities, indices, things of that nature. That's for sure. Okay, let's see. We're going to have to get on to some of these markets. Great Britain pound, Japanese yen, and Bitcoin, absolutely. Got a couple of questions over here. Let me see. Marvel, I took some profits from the Great Britain pound USD market in the early hours of the day. 1 to 4 risk versus reward. Healthy risk versus reward. You don't have to hit 1 to 4s very often to be profitable, that's for sure. So well done, Marvel. Let me see, Daniel. What do you think about gold and an inflation hedge as an inflation hedge? But if they all up because of rates, if they all up the rates because of inflation due to oil, price money is looking for yield, real yield, so more downside potential for gold. I think you've hit it right on the head. And just to sort of translate a little bit, what Daniel's talking about is the interest rates more than likely aren't going to move now because of gold. We're going to have FOMC live for you on Wednesday. Tune in. We'll break down Jay Powell and everything that he has to say in real time, and I'll add my own critiques and things. But you're absolutely right. When you start talking about maybe a dollar index or a dollar that's stronger, that stronger dollar is going to be sort of a drag on gold. And so are you going to strengthen the dollar to try to keep inflation down, specifically as it pertains to oil? Yeah, more than likely. I'm still looking for aggressive rate cuts out of the next Fed chair, but I don't think they're going to develop until July now. I was looking at June as being probably a half-point rate cut, my own personal opinion, and I don't know that we get that now. I think it's going to be later on in the year, but believe me, at some point they will get aggressive with the rate cuts. That's a big part of the economic plan moving forward. Of course, nobody factored in $100 oil, and that's going to have a major impact. And it's going to absolutely put restrictor plates on the global economy, not just the United States economy. So you're absolutely right. We're going to talk about interest rates here in just a second. We've got some key events, that's for sure. All right. Let me see. Let's get on. We got one more trade update here, and then we'll get on to some of the trade requests. We've got TerraTax GDP and the Euro USD. We're just going to touch on this one because this level is coming into play. This is sort of our downside support level. We just missed our entry. Last Friday, but that's okay. You don't really want to be taking new trades on Friday afternoon. And since then, we've got a bit of a bounce back up to 115. Our support zone's right down there, right around 113.60, somewhere in that area. You got the Fed acting this week. Will not surprise me if we get an opportunity to bid this Euro USD ahead of the Fed. So I'm watching this closely for the next 48 hours or so. I think we're going to have a real chance potentially to get a nice trade. And if we get a nice trade, it was just a basic bid idea. Nothing too fancy down there from about 113.65-ish, 113.61. So we're watching that closely. I'm waiting for 114 to wash out. That area stood up is really robust. Downside support down there about around 114.11. And since then, we bounced up to 114.98. Interesting stuff going on right now in the markets. The dollar is moving. Right now, the DXY is off about 0.63%. That theoretically is going to boost stocks. A weaker dollar boost stocks, boost commodities prices. But right now, WTI crude losing about 5% is the big story. It's Monday. You got to let things set up before you get in there with a lot of confidence. That's for sure. That's for darn sure. All right, so let's go ahead and take a look at a couple of these markets here. Let's see, Bobby Bob. Great Britain pound, Japanese yen. Let's do it. So Great Britain pound, Japanese yen is one of those pairs that a lot of folks love to trade, and they love to trade it because it's volatile. So right here, you've got about a four pip spread. Not horrible, but not great. I mean, for tick scalping, you're starting to get to it's getting to be a pretty big spread. So what you're looking at here more than likely is going to be short-term positions, which is fine. There's absolutely nothing wrong with that at all. Just taking a look at price action itself without any indicators, the first thing that we could say is, okay, this was a nice big move. We're still trading really inside of this range that developed back on the second week of February. We're trading sideways inside of that big red candle. So, are we on the move? No, not really. We're not really on the move. We're trading sideways here. So why are we trading sideways? Well, number one, the uptrend, the long-term uptrend is still incredibly valid. You can see it right here. But we're just sort of creeping around. You can see all the business that we've done in this area. I mean, I don't know if we have a TPO. That might show us something. TPO charts are always tough on OTC markets because you don't really know the volumes. But this right here is sort of real tight. You can see a lot of business in here, a lot of debate right around that 210 level. So right now, what do we have developing? Well, we've got sort of a grind. That's exactly what I would call that. That's a grind north. It's not a big trend. It's not a big move like this. Each week, though, you are sort of stair-stepping to the top side. So should we have a bullish or bearish bias? I would be slightly bullish, but I wouldn't be I wouldn't be running down to the bank to get all my money to throw down on a long position here in the Great Britain pound Japanese yen. I wouldn't be doing that. I think that you got to be realistic about what exactly is going on in the market. Spike low there, spike high. Okay, you've got a sweet zone right there at 211, 211, right in that zone is not a bad place to be. It's not a bad place to be. So you can see downside support was beautiful. That worked. I would be watching that area as we roll later into the week. It's only down there about 90 pips. I think if you get another opportunity to do some business right down around that 211 level, that 211 handle, it's not a bad area to be. So if you're long, you're probably right, at least for the moment. But you can see this area, fantastic demand zone, inverted hammer formation. That means that you had a big rally and then everybody sold off, and then this level held beautifully. It already held once this week. I'd be looking at that again. Great trade. Let's start off the week. If you actually saw that ahead of time, that was a good one. That would have been a great bid. But for right this minute, we're a little late to the party, so we're going to have to wait and be patient, maybe get another one. All right, let's go ahead and have a look at Bitcoin. Bitcoin is on everybody's mind. You got a nice big rally right now. You're up to about 73,000, which is interesting. What we really wanted was the 58, and I don't know that we get it. Maybe, maybe not. Jury's still out. Bitcoin, I would say, still in rotation. Yearly chart. Very rarely am I pulling a yearly chart on these live streams, but, let's take a look. 83, you're back up above 70. That's good. This area right down around 58, 58.5 is fantastic, but you got to be able to get it first, and we just didn't get it. So right now, back up above 50. I would be watching 83, 84,000 as being potential resistance, believe it or not. But right now, you're trading just short of that 75 level. So it's a nice bounce. Are you trending, though? No. Long-term uptrend, still very much intact. Definitely a flattened out, though. I mean, this year has been a flat one. You're down about 15.68%, traded beneath last year's low. Really, I mean, I guarantee you that they washed a tremendous amount of retail traders, retail longs out beneath last year's low. That's why you always know where key levels are. It's imperative that you know that. But for right now, 58, 58.5, great downside support. But do we get there? I don't think so. I think we're back up to about 73 or 75,000. Let's go down to a daily chart and see what exactly has happened. And this is it. This is your big sell-off early February. And really the lid on this market was 70,000. And now you sort of broke out a little bit to the top. I wouldn't get too carried away. I don't think I would take my life savings in there and buy 75s. I don't necessarily know that you need to do that. But as far as how would I be trading this, probably have a little bit of a bullish bias. Top side resistance clearly is going to be this long-term level right up here at about 84, something like that. Maybe a great short-term sell, but for right this minute, we're trying to get established over 70,000. That's the key. And we've sort of bullish, compression, had a nice big run off and then an immediate sell-off. Have we right it? Have the bidders won? That's really what it's all about. Have they won? I don't know that. I don't know that for sure. So intraday play. Take it down to a 4-hour chart. See exactly what happens here. Boom. What do you got? You got a nice big break and a rally. You probably could buy somewhere right up in here, maybe around 72.5 for a short term, maybe a scalp type of a trade. But somewhere right in this zone, 72.5. Pretty good play on a 4-hour chart. For me personally, though, I mean, it's really tough not just to be patient and wait for 71,000 and take that bid. That's a pretty darn good bid as well. So definitely something to think about there if you're interested in Bitcoin. All right, we got a few things to go over from a fundamental perspective on the week. This is what our schedule looks like today. All about the Iran war. I haven't talked any about it, and we're already 30 minutes into the stream. So I'm going to go ahead and get on over to that news because that's what's driving pretty much all of your participation. Iran war is the market driver. Keep that front and center when you're trading this week. Always be watching for headlines out of Iran. That's what it's all about right now. Tuesday's pretty quiet. Not a whole heck of a lot on the economic calendar as far as market drivers go. Wednesday, business picks up. And you're looking at FOMC Live. I'm going to have that for you. We're going to do Jay Powell's engagement where he's going to come out and basically my guess is he's going to blame it all on the administration. They're going to say inflation's going to be hot because of the oil prices. I guarantee that's going to be a talking point. They're not going to cut interest rates before Jay Powell leaves. That's a fairly safe assumption at this point. So we're going to cover FOMC Live for you on Wednesday, Thursday. Bank of Japan, the S&B, and the BOE rate decisions. The Bank of Japan has sort of been a global hawk lately, and that's new for the BOJ. The BOJ always wants to get to a negative deposit rate as fast as they can so they can sort of play that dirty float mechanism where those exports are hyper-competitive abroad. So you definitely are watching that closely. I don't know that they raise interest rates, but I'm expecting sort of a hawkish tone out of the BOJ, at least for one more meeting or so. We'll wait and see, though. The Swiss National Bank, the S&B, that's sort of my dark horse. I think that's where your risk really lies because the S&B, they're the cowboys of this end. They're the cowboys of the banking industry. They do what they want when they want, and that's all there is to it. That's it. If they want to cut interest rates, they'll cut interest rates. If they want to raise them, they'll raise them. That's just the way that the S&B typically does it. And the other thing about the S&B is they'll make moves and they won't foreshadow or tip their hand to anybody. And that's typically not the way that bankers do business. They don't like to shock markets. The Swiss National Bank doesn't care. They'll do what they want. And so I'm watching that as being sort of a dark horse type of a risk event this week. As far as the Bank of England goes, I think you're going to see a dovish Bank of England, at least for probably through the spring. At this juncture, everybody's waiting to see what happens in the United States Federal Reserve. They really are. They're waiting for the next Fed chair. They're waiting for Warsh, who's supposed to be the guy. We're going to see if they cut interest rates aggressively. Really difficult to say. But that's a huge day. Thursday, really after the FOMC speaks on Wednesday, all the way through that Thursday London session, that's a banger. So if you're going to be trading Forex, have your stops down and leverage in check during that news cycle. That's going to be a very volatile 18 hours on the markets. Incredibly volatile. Be ready. Friday is going to be a true no donation Friday. We don't have anything planned. We will get you prepped and ready to go. Looks like week 3 of the Iran war is going to be stretching through another weekend. Mondays are great. To game plan. Get in there, game plan, figure out exactly what's going on, and try to figure out how you're going to be successful in the week ahead. And all we do is we say, listen, a lot of Mondays are slow. This is not one, and that's because of the war. The war is driving participation. What you want to do is you want to trade into the positive. You want to make sure that even if you're taking small profits, taking little bites, take a few little bites. The goal of everybody as an active trader is to start trading with someone else's money as quick as you can. And the way that you can do that is take a few small profits. Really takes the pressure off going into Tuesday, Wednesday, Thursday. Don't go into a hole. Avoid large losses on a Monday. If you take a large loss on a Monday, you're going to spend the rest of the week trying to dig out. And that's not what trading's about. Trading's about making money, not just trying to get back what you lost. All about momentum. Monday's the day that we start momentum. We game plan for the week ahead. We've done that. We've shown you some key levels. We're looking at some markets. I think it's going to be an interesting week. We already know our economic calendar and what's driving participation. That's for sure. So what you've got to do here is game plan for the week ahead. That's huge on a Monday. And then generate momentum. Let's get it going. On Fridays, we put half that money in our pocket. We come back Monday ready to trade. And Monday is the day we get it all going. We start trading. I wouldn't recommend trading huge leverage right out of the gate. There's no reason to do that. If we're going to take our risks, we're going to do it on Tuesday, Wednesday, Thursday. That's going to give us the best opportunity potentially to succeed. So that's something that we need to be looking at all the time. Momentum. I've said it a million times, and it really is the key to sticking around in this game. You've got to be able to get the ball rolling on a Monday and preserve that momentum on a Friday. If you can do those two things, the trading typically Tuesday, Wednesday, Thursday, that trading will take care of itself. That's for sure. Let me see. Daniel, did you know that the BOJ is the biggest treasury holder? Apparently over 30% of all treasuries out there. The BOJ is an interesting thing. Japan itself carries so much debt. It seems like the idea was just to print a bunch of yen and then buy things. That's really going back to the Olympics that were delayed because of COVID. I believe that in itself was a $9 billion debt that the Japanese ran. And so typically if you're going to run that large of a debt as a government, a sovereign debt, you're going to probably be running it through your central bank. So it doesn't surprise me at all that they have a ton of treasuries. But it's a good point, Daniel. And if they start unwinding those treasuries in a really rapid rate, then who knows what can happen to the markets. That's for sure. I'm not sure if true. What's true anymore? I don't know. I've been watching the war reporting for the past 3 weeks. I have no idea what's true. Who knows? 6-month T-bill auction, 3-month T-bill auction. These are the standard issue treasuries auctions that you see on a Monday. Really nothing to write home about here. A little bit of a tick higher in the 6-month T-bill. That's because of your oil price is probably going to delay those rate cuts at least until July. That would be my guess. But we can always be surprised. That's for sure. As far as our news cycle here, what do we have going? Well, I mean, we got a lot going. U.S. is allowing Iranian oil tankers through the Strait of Hormuz, Besant. What they're trying to do right now is figure out a way to not disrupt the entire global economy with the energy. The energy is everything. We saw attacks on the island there. What was the island? The name of the island? Krang Island. There was some attacks there, but those were also in an interesting position because they didn't blow up the oil infrastructure. They left a lot of that intact. They hit military installations. We will wait and see. We will wait and see how this pans out. But right now, Iranian oil tankers are going through the Strait of Hormuz, and probably some of those or most of those are going to China. Interesting stuff. Warns countries. We will remember Trump warns countries to help secure the Strait of Hormuz as shipping stalls. This is what it's all about. Oil prices fall as Trump pressures allies to help protect the Strait, tankers in the Strait of Hormuz. So what is all this about? Basically, it's about the oil infrastructure. There's a couple of things we have to watch. Number one is ground troops in Iran. That's what we've been talking about. It is going to be an interesting period to trade. You can see these odds. We're looking really for a bullish crude oil market. It looks to me like that's exactly what's happening, and that's going to drive participation to and fro risk assets. So if you're looking at military strikes, pretty much we know that it's going to be consistent strikes day in, day out. U.S. forces enter Iran. That's a big one. 63% say that happens this year, but only 28% say it happens this month. Interesting stuff. Which countries will strike Iran? You've got everybody's lining up now, and it's going to be an interesting period of flux. Do the Iranians have munitions to answer? Do they have as many missiles as everybody believes they do? We're going to find out. What about the leadership? It's really difficult to figure any of this out right now. Will the U.S. invade Iran by March 31st? Only a 17% chance, but it's still a chance. This is developing into a world war. Will France, UK, or Germany strike Iran by March 31st? Only 6% chance, but that is what we're looking at right now. 50-50 that the United States goes in with boots on the ground this year. I think we're looking at boots on the ground. I think it's going to happen. Is that a good or bad thing? It marks escalation, and that's really going to mess your markets up. It's really going to mess them up, at least in the short term. Now, if the United States and Israel and allies can go in there and secure the Strait of Hormuz, potentially, without taking a huge number of casualties, which a lot of people don't believe can be done, then you will see your oil markets will come way down. Your global economy is probably going to stabilize, and it really won't be a huge market disruption. However, if you get bogged down in the Strait of Hormuz and you can't open it and you take a lot of casualties in there, I believe we saw 5,000. That's what we covered Friday, 5,000 Marines were headed there, amphibious trained Marines. Those are folks that do beach landings. That means that there are people thinking about an invasion right now. Does that happen? To have a regime change, it's probably going to have to happen. Or does the war just wrap up in short order? Man, it's a tough question. I wish I had the answers for you. I would just tell you, I don't know. Nobody knows. And the way that the trajectory that this is on, this feels like a ground invasion by probably the middle of April. This doesn't feel like this is going to be over anytime soon. You'll also see the regime. The regime's not expected to fall. All these odds, they're not expected to fall. Look at this one. What will Iran strike by March 31st? Refineries. That's big. Probably going to try to hit Aramco. Those facilities. Those are all big. So what I'm trying to say here is this thing is far from being decided. We saw Trump over the weekend come out and say that the objectives have been achieved. I don't know that anybody believes that. I don't know that anybody at all believes that. So we are very much in a state of flux right now with the Iranian war. Don't know how it's going to pan out. We're going to do the best we can to watch the news. If we see breaking news, I'll just jump on a live stream if it's big news, and I'll tell you what I think about it and what's going to move the markets. But right now, you're really looking at a couple of different things. You're looking at boots on the ground. That's still a big market driver. You're looking at the Strait of Hormuz. Does an oil tanker get sunk in that strait? That's what'll really derail everything. Now, they haven't sunk a boat out there yet. They've sunk a bunch of small ones, but I'm talking about an oil tanker. If they sink one of those oil tankers out there, you're going to have a real problem getting anything through that shipping lane. And that right now is what everybody's worried about. Now, as far as the missiles go, we don't know. We know that there's a lot of interceptors over there. Word around the campfire is that the allies are sort of thinking they have about another 2 weeks worth of interceptors, maybe 3 weeks worth of interceptor missiles. Does Iran have more missiles and munitions than Israel and the UAE have interceptors? If that's the case, then you're up for a real dynamic situation here. I don't know what's going to happen. No idea. I would venture a guess. I don't believe this is going to be over fast. I think that for things to go back to a relative normal and to get the markets away from pricing this crisis stuff in every single day, you're going to have to see something happen by Friday. And I have a feeling that Trump and the administration, they're not going to let this go on much longer. So I would, I fully expect somebody to declare victory anytime. I don't know that anything's really changed aside from a lot of damage. Let's wait and see. Let me see. CNBC, how about Fox Business? More credible. Linda, I hear you. I don't want to get into the argument between Fox Business, CNBC, Bloomberg. Let's be honest. They all have agendas. The truth is always somewhere in the middle. That's why I'm looking at everything. I use CNBC because it loads fast and it's free. Realistically, we should have a live news feed that's a pay for play, like a Bloomberg terminal or something, but I'm not paying $5 or $6 grand a month to do it. So we're going to look at CNBC, but I hear you. I feel you, Linda. Believe me, I get it. How about Fox Business? Yeah, we probably should be doing a little bit more fair and balanced. I just wanted to show you the headlines and the pictures though. That's what's being priced. As far as CNBC, I hear you. I'm not real big on the NBC networks at all. I'm not real big on mainstream media really in its entirety. I think the truth is always somewhere in the middle, almost always somewhere in the middle. And there's a lot of podcasters out there. There is a lot of alternate news sources that know their business. I mean, now it seems like everybody's got a podcast or everybody's got a live stream. And a lot of these folks, these men and women that are doing these shows have connections. They have connections inside the White House, and it's just like a constant. The Trump White House is pretty good about not leaking military operations, but a lot of these guys that have these shows, they know before everybody else knows. So I hear you. Believe me, I'm not a CNBC shill. No way. That's not who I am. But we're traders, and we got to take the headlines, and get after them. Let's see here. Should we buy the CAD yen? All right, let's look at the CAD yen. And I believe there was a kroner. We wanted to look at the kroner. I'm going to have to skip the kroner, I think. Probably till tomorrow, but let's go ahead. CAD yen. 4-hour chart, you notice we're not really using any indicators today. Just sort of looking at price action. A lot of you really favor this type of trading. For me, looked at a million charts so I can see immediately what I want to get accomplished by just looking at price action. So 4-hour chart, CAD yen right there. You can see the sell-off, and now you're sort of messing around right there at that 38% level. It's been robust topside resistance, but you've sort of broken above that zone. So to answer your question then, Daniel, should we buy the CAD yen? I think with this much news out, with the oil market and the BOJ getting involved here in about 48 hours, I think it's anybody's guess where the CAD yen goes. I think it's risky. It really is risky. But if you were interested in taking a buy right now, you could buy right above that 38% right now on 116.41. You could take that bid, stop yourself out underneath 116. It's probably not a bad trade. I don't know where we're going, though. A lot of resistance up here. If you're going to take that trade, you probably have to be looking for that 78%, maybe 116.75-ish, 116.81 to make that trade worthwhile, especially if you're going to risk, 38 pips or so to the downside. Interesting. Let's go ahead and take a look at the CAD yen on our 920 EMA. So there's your sell. Essentially, there's your sell. 4-hour chart, cross under. Right there, the 9 crosses under the 20. Essentially, that's your sell signal. You can see the bid. I mean, there's a heck of a buy that developed back on the 23rd of February, and you made a lot of money on that one. But this one right here, is this sell worth taking? I don't know. It's really disjointed and flat in there. I think that if you wanted to take the long, you could certainly do that, with the idea being the WTI crude is going to drive the Canadian dollar north, and maybe you get a dovish type of reaction or response out of the Bank of Japan. You could certainly do that. Just watch your risk. That's all I got to say. So if you're going to take the bid from here, I don't hate it, but I would stop myself out underneath 116. And if you wanted to take the short, the sell, the big purple sell there, you certainly could do that. That's sort of playing this downward pressure that we saw really developing back on the 12th last Thursday. Right now, though, the market's relatively flat. Whatever you decide to do, just manage your risk. That many events are coming. Just manage your risk, that's for sure. Let me see, Marvel, you're so good at analysis. I do enjoy each section. Well, thank you, Marvel. I sure appreciate it. Analytics are, I don't know. I've just been doing this for a long time. And there's a lot of traders in this room that watch these streams that are every bit as good as they bring analysis that I read in the messages, and I go, wow, that's just good stuff. So the biggest thing about analysis is don't fall in love with it. Don't fall in love with your analysis. Well, as soon as we know we're wrong, we're out and we're on to the next trade. But we had some pretty good stuff in gold. I was very pleased about how that gold trade panned out. That's for sure. Euro, Great Britain pound. We had a trade idea out on this one, and it's just dead. We'll talk about it some other time. But that top right up there, that 86.54 essentially was a pretty good look at that profit target. We'll go ahead and review this one tomorrow. But when you talk about slow trades, I mean, this thing is slow. That's right. Our buy was up there right around 50. So this came back to break even. Still in a pretty good position. It's just nothing's happened. So you definitely want to be, I don't know. Sometimes these trades are just boring. I hate boring too. You get into one of these, you wait for your level, and you get into it, and geez, we've been in it for 5 days now, and nothing's happened. So maybe you let it go, maybe you don't. I don't really know. All right, let's check in on our 9 EMA, and we'll go ahead and call it a day. 9 EMA strategy right here. Our WTI trade, came in pretty good. Nice little bid right there. Nice rally. Not bad at all. That was a pretty good signal there. Or did we take this one? I can't remember. I think we took this one right here and got swept out, but this trade right here is coming back in a big way. So remember, if you're a systems trader, if you're a strategy trader, you got to be disciplined and you got to stick to your guns. You're not going to win every trade. But over time, and we did some of that live trading last week, but over time you'll see that your edge will start really developing when your trade management, when you excel at trade management and risk management, that's when you'll see a big change in your trading. That's for sure. All right, everybody, I'm going to go ahead and sign off. Oh, you're too kind, Tina. You're too kind. That's for sure. I sure appreciate that. I try to be as honest as possible here and tell you exactly what I'm seeing in the markets, and I think we do a pretty good job. We put out a lot of ideas that are pretty good, but this is really a difficult time to be in. And if you're just now learning, take your time, start small, don't dive into these. These are really, really challenging environments, really challenging markets. And I don't want to see anybody get chopped up or take huge losses. I've met a lot of you on one-on-one calls and things, and some of the stories I've heard, they're not, I won't say they're sad, but they really are one of those things that you go, okay, you took a huge loss in an extremely volatile market. Learn as much as you possibly can from it. Because at the end of the day, if you're a trader and you want to make this part of your life, you can't be taking big losses often. It just doesn't work. I mean, there's an old movie out called Into the Pit, and it's an old trading movie that I've recommended to a lot of folks, and I've watched it. And it's got some foul language and things in there, so it's not necessarily for everybody. But there's one guy in there the guy's basically he plays the piano, and he's an incredible artist, sort of, but he's an alcoholic. He's type A personality or whatever. And the guy tells you the truth. He says, just don't start losing money. When you lose money, it changes everything. And it sounds really obvious, but it's 100% right. There's a difference between taking a structured loss and taking an epic cataclysmic loss. And you can't be taking those huge losses. So if you find yourself adding to losing trades, fighting trends, taking huge losses, stop doing it. Stop taking the losses. Change your strategy, change your mentality. Do whatever you have to do. It's all about taking small losses. And if you can do that, manage your losses. Don't let these things get away from you. Last Friday, a great example of a trade that just broke against us really fast. And we went through the psychology of, okay, we're in deeper and deeper and deeper, and now we're starting to get into real trouble if the market doesn't reverse. Don't go there. Don't go there. Don't sit around. If you find yourself hoping the market turns in your favor, you're probably already a dead duck. So you've got to make those decisions really quick. And one of the things that this 9 EMA does is it really just tells you exactly where to cut your trade off, and that's a good thing. That's a really good thing. All right, everybody, I'm gonna go ahead and sign off for today. Marvel, please, can you share the link of the movie? It's just go to YouTube. It's free on YouTube. Go to YouTube. It's called Into the Pit. Floored. I think the first thing is Floored Into the Pit, and you'll be able to find it, or just Google trading movies. It's on there. It was an old one, but it was a really good one. I enjoyed it. That's for sure. All right, Eli, you're absolutely welcome. Unbiased. Yeah, we do. We try to stay as unbiased as possible here. It's all about money. Money doesn't have a bias. The market either goes up when you buy or it goes down. And if that's the case, you run into trouble. All right, everybody, I'm going to go ahead and sign off for right this minute. I sure appreciate great crowd today. A lot of good input. Come on back tomorrow. We're going to do it all again, same time. This is a big week for our live streams, though. We're going to be going with that FOMC Live. That's a big one. And then Thursday, we're going to be doing our Switch Markets Live webinar, How to Trade Crude Oil. I might add another stream on Thursday, though, because there's so much going on in the Forex. We're going to need to cover it and break it down and answer any questions that may come up. All right, guys, we're going to have a fantastic week. You're absolutely welcome. Bobby, Bob, Tuka, good to see you guys. If there's anything else that I can do for you, just be sure to reach out, send a private message, and I'll get right back to you over at howtotrade.com. Remember, I'm working over at How to Trade, and it's the synergy. It's Switch Markets, that partnership with How to Trade. The idea is to give as much educational content as we can so you can apply it directly into the markets. That's what it's all about. Eli, hope is a dangerous thing. Hope can lose you a lot of money, and hope is big in life. I'm not saying don't be hopeful, but if you're trading and that the market's gone against you and you're looking down the barrel at a big loss and you find yourself hoping with your fingers crossed that the market reverses, you're almost better off just cutting it off and moving on to the next trade. Your first loss is your best loss, and that's a fact. All right, everybody, have a fantastic trading session. As always, trade the action well, and we'll talk soon. See ya.